Hello and welcome, everybody. Welcome to the ecom Sales Tax Podcast. In this podcast, it's all about helping e-commerce sellers and their advisors keep up with the constantly changing world of sales tax. Now, so let's get started. And I'm Andy Johnson, and we've got Mike Fleming. Hi, Mike.
Hey, Andy. How you doing?
All right, Mike. So we're going to keep people up to date. What's going on in the world of e-commerce sales tax?
Well, we've got another letter from Amazon, or another memo going out to sellers. It's really not new information. It has been sent out before, but not everybody got it the first time. This is the announcement that Amazon is being forced to turn over seller information to the state of Massachusetts. So previously, January 22nd, an announcement went out to a number of sellers, not all sellers, but a number of sellers, stating that their information was going to be handed over by, I believe it was January 26th. And some people were saying, well, I never got one. Well, those people are now getting them now. And it went out last night, and they'll be turning it over to the state of Massachusetts the first week of April. So don't have it in front of me here. I forget the exact date, but it'll be the first week.
We've talked about this. So we've talked about this a couple of times. So if you look back in the history of the podcast, you'll see that we talked about Massachusetts, and it's always a little disturbing. It's very disturbing that a state can force a marketplace, a company like Amazon, to turn over state's evidence. So I guess maybe they had some sort of glitch in notifying all of their sellers, and so they're just re-notifying them, and they're going to turn over more information in April. Not sure what that all means.
They're turning over the same information as before, but it was a lot of sellers they have to go through. They had a short time frame to do it. Amazon, fought the state of Massachusetts. They were originally ordered to turn this over back in September of last year, but they did not comply, and it was dragging on in the courts. And I guess they had a short time frame when the court finally said, "Hey, you got to turn it over," and they did the best they could to meet the deadlines. Is what I'm guessing. I don't have any inside knowledge, but the sellers who have sent it over to me this time have said they never received anything the last time. So I'm putting two and two together. The letter reads, exactly the same, except the dates. The only thing different on these letters is the dates. And what this means, number one, it's not the end of the world. If you go back to our prior podcast, you'll see that the warehouse in Massachusetts didn't even open until October of 2016, so it's not like they can go back to the beginning of the time. However, at some point, we believe that Massachusetts is going to start acting on this information, and you'll probably be getting a Nexus questionnaire or a call from Massachusetts or something along those lines. To me, it's more of a wake-up call that not all states believe that Amazon should be the one collecting the tax, and that some states are going to continue to pursue FBA sellers themselves. So if you have any questions, go back and look at the earlier podcast, or give us a call. We can talk about your situation in specific.
Or connect with Mike on LinkedIn and send him a question through that.
Even better.
That's a good way too. All right, Mike. So that's the latest in Massachusetts. We talked about that a constant question that we get from e-commerce sellers has to do with drop shipping. So I know you've got some slides about that, and I think this will be really helpful to help people just get a sense of what are the tax issues when it comes to drop shipping.
Yeah, absolutely. And, as I was trying to think of some topics to talk about this week, I had a call yesterday. And that's what sparked this here, because drop shipping can be so confusing. And excuse me there.
Sharing your screen. Very
Yeah,
good. I
having a
see
little
it.
bit of technical difficulties. Can you see it now?
I see it.
All right. So this gentleman, he was from overseas, and he wanted to sell through Amazon and use Walmart to fulfill those sales.
You mean this gentleman in the picture?
Oh yeah, the guy who's drowning there. He's drowning in sand. I forget my pictures. I thought you were making fun of my picture again. So stop me in my tracks. Um, but anyway, he was someone that we were doing a consultation with. And the reason we were doing a consultation with is because they went to Amazon's website, and Amazon said, in the state of Wyoming, and he had set up an LLC in Wyoming, here's what you need. And he was talking to our salespeople and was saying, hey, I need to get registered in Wyoming because I need to give Walmart a certificate for Wyoming because they're going to do drop shipping for me. And our salespeople know enough to say, hey, that's not exactly how this works. So we think that you should actually do a consultation. And I just want to go over some of the basics so that you all have a resource to know how drop shipping actually works. And there's a lot of reasons why this is so confusing, but generally it's because it's, two or more transactions, terminology. Every state uses different language to describe this. There's a lot of misinformation out there, a lot of disbelief. I mean, if when you're told that if you're in Texas and you're shipping something to California and your vendor has to charge you tax in California, yeah, there's just disbelief there. Why? So we're going to touch a little bit on that. And then, sometimes your vendors don't understand what they need to be collecting. They've just gotten audited, or they've got a friend who's gotten audited, and they're having knee-jerk reactions. So some of you out there at this point are probably saying, what's drop shipping? And yeah, I can't believe you haven't asked me what drop shipping is yet. But typical scenario.
Hold on, I was on mute.
Okay.
I was trying to unmute so I could say, Mike, what's drop shipping?
Thank you very much. Drop shipping is basically when you're selling something you don't own. So in the scenario that we were just talking about, this person who wanted to get into drop shipping, he was selling something on Amazon and he didn't own it yet. So when someone purchases that item from him through Amazon, he turns around and he's going to place an order with Walmart. So in this situation, he's the retailer, and Walmart is going to be what we call the vendor. So there's actually two transactions here. There's the transaction between the person buying, the customer buying through Amazon, and this retailer. And then the retailer turns around and buys from Walmart. So two separate transactions. And then the retailer in that second transaction, he's going to ask Walmart to ship that product directly to the customer. So you've got two examples of transactions here. That first example is a normal transaction. Customer places an order with you. You turn around, and you're the retailer in this case, and you turn around and ship it to your customer, who we're calling the consumer. In a drop shipping scenario, and by the way, there can be multiple parties in a drop shipping scenario. One of our clients, one time, there were 8 separate parties in this drop shipping scenario. They wanted me to make heads or tails of it. But for our purposes today, we're going to keep this simple. Just, 3 parties, 2 transactions. We've got the consumer. He places the order with you, the retailer, and you then turn around to your vendor. You place an order with them, and then the vendor's shipping it to the consumer. Now, a couple of basics. Most of you out there are selling, or I assume most of you, if you're doing drop shipping, are selling what we call tangible personal property. And tangible personal property, something you can see, something you can touch, something that's stored on a shelf, that's tangible personal property. It's what most e-commerce sellers are selling. And the rules for that say that the ship to state, wherever you're shipping that property, that's the state where you want to collect the tax, or a certificate that's acceptable to that state in lieu of the tax. So it's the ship to state where the sale is sourced to. Where the purchaser, and you're the purchaser in this, where you have nexus just doesn't matter. It does not play a role in this. You don't ask your customers if they have nexus when you're going to charge them sales tax. If you're charging sales tax, it's based upon where you have nexus. And for those of you who don't know what nexus is, just a fancy word to mean link or connection. And it's the link or connection you have to have before the state requires you to collect its sales tax. So if I have nexus in a state, or if you have nexus in a state, you're supposed to collect the sales tax on every taxable transaction or some sort of certificate in lieu of the sales tax. We never ask our customers where they have nexus. So here's why this is so important to your vendors. A state is generally not going to recognize a sale as a sale for resale unless you have it properly documented. So going back to our example, let's say that you're in Texas and your vendor's in Oklahoma and the consumer is in California. And the Oklahoma vendor says to you, okay, I need you to give me a certificate or I'm going to have to charge you the sales tax. And you go to give them the Texas certificate. And unfortunately, California doesn't recognize the Texas certificate. So it's real important in the ship to state that they're going to accept the certificate that you're giving. So your Oklahoma vendor should not accept that certificate from you. That's why they're saying we've got to charge you the tax. So this is where it gets a little bit confusing because every state has different rules on what they can and cannot accept. So that's what your vendor is, they may have never asked you for anything before and then they get audited and now they're saying you need to go out and get registered everywhere. We're going to touch on that in a second. But right now I want to simplify this because everyone gets really confused. No matter how many years you've been doing sales tax, dropshipping can be very confusing. But one of the ways to make this simpler is to look at it as two separate transactions. Everyone wants to look at it as one big transaction. But if you look at it as the two separate transactions, there's in our example here, the transaction on Amazon between the consumer and the retailer. That's the first transaction. That's pretty straightforward. You don't have nexus and you don't have to collect the sales tax, or in this case, he didn't have the nexus. And the second transaction. And in the second transaction, that's where things start to get a little bit sticky. So if the vendor has nexus in the ship to state, they must either collect a certificate acceptable to that ship to state or charge you the sales tax. So in most states, you're going to be able to provide them some sort of documentation without getting registered in that state. There are 45 states plus Washington, D.C. that actually have a sales tax. In 36 states, there's something that you can provide, either your home state certificate, either a certificate from the ship to state, like in New York, you can actually download a certificate. You skip section 1, which is if you're registered, you go directly to section 2. It's going to ask you where you are registered and what your number is in that state. Pennsylvania, you're going to check box 3 saying this is a sale for resale. And then on box 7, you're going to check and it's going to say, please tell us why you don't need to have a Pennsylvania number. So you just write in no nexus. So every state will accept something different. But there are 10 tough states out there. And by the way, you're going to hear me say this over and over again. If you get nothing out of this podcast, remember it doesn't matter to your vendor where you have nexus. They're asking.
Hey Mike, so if I could interject a little bit.
Okay.
First of all, the people on the podcast are thinking, hey, I'd like to see these illustrations that you're talking about. So we're going to make these available in the show notes. But I just want to back up a little bit here, because every e-commerce seller, especially if they're on this podcast, knows that wherever that they have to collect sales tax, at least in their home state, and maybe in another state, depending on whether or not they have Nexus. So you know that as a seller. Sometimes you don't think like, hey, that same rule applies to my suppliers, right? It just seems like a no-brainer that I'm buying this for resale. So supplier, why are you trying to charge me sales tax? But just like you, as a seller, now you may not be selling to wholesalers, so you may not experience this, but you have to collect sales tax as a seller everywhere you have Nexus, unless your customer gives you a certificate. And if you don't get a certificate, an exemption certificate, resale or otherwise, you got to collect a tax, or you're exposed in an audit situation. Your suppliers, when you're in a dropship situation, face that same burden. Wherever your supplier has Nexus, and it could be in lots of places, could just be where they have a factory, but they may have Nexus all over the place. So they have to collect tax wherever they ship the product, not to you. They're not shipping it to you, they're shipping it to your customer. So wherever they ship this product, and if they have Nexus in that ship to location, they either have to collect the tax or collect a certificate. And who do they collect the certificate from and the tax? They collect it from you, even though it's obviously a sale for resale, and they agree with that. But to protect themselves, they've got to collect a valid certificate from you, and that's what we're covering.
Exactly, and that's one of the biggest rubs here. This is a customer service nightmare, because a lot of retailers out there, they hey, this is a sale for resale. What do you mean it's not a sale for resale? And that goes back to the previous slide. If it's not properly documented, which means if it's not on the right form, if it's not on a form that's acceptable to the state, then the state doesn't recognize it as a sale for resale. And they'll go after your vendor for the sales tax. And even one missing certificate, because sales tax audits are done on a sample basis, can have a huge impact. I mean, we could be talking about hundreds of thousands of dollars because of one or a couple of missing certificates. So that's why there's this big crackdown happening now and why some of your vendors are making such a big issue of getting these certificates from you. So any follow-up on that, Andy?
Nope.
All right. So in 36 states, as we were talking about, you'll be able to provide either your home state certificate or, we talked about New York and Pennsylvania. But there are 10 states that at least in the 7 up on the screen now, in most circumstances, you have to be registered in order for the certificate to be valid.
All right, Mike. So if I can make sure that I follow this. So you're saying that in many states, they will accept. So let's say I'm a Texas, let's say I'm a Utah drop shipper, and my vendor, my supplier is in Texas, but my customers are all over the place. Or no, let's say my supplier is in Oklahoma. Try to make this simple. And all of my customers that I'm shipping to are in Texas. So I'm this seller, and I'm in Utah. My supplier's in Oklahoma, and they have Nexus in Texas. All right. And it just so happens that all of my customers are in Texas. I'm not registered in Texas because I have no Nexus there. I'm the supplier. What you're saying is Texas is not on this list. So my vendor, my supplier in Oklahoma, is going to try to charge me Texas tax because they have Nexus in Texas and the product is being shipped to my customers in Texas. However, Texas will I can, without getting registered any other place, just my registration in Utah, that vendor in Oklahoma will accept my Utah certificate for resale because Texas allows them to accept a Utah resale certificate.
Maybe, maybe not. The language in Texas specifically states it has to be in substantially similar form. And we have been involved in audits where the auditor will say that this is not substantially similar form. So a lot of times the vendor, even if they could accept it, may require you to submit something else. So sometimes this is what the state will accept. Sometimes it's what your vendor will accept. What you can do, and your vendor will definitely accept this, is go to Google and type in Texas resale certificate, and one will pop up. And if you look at it, it's going to ask for your information, then it's going to ask for your Texas number. You leave that blank. Directly below that, it says out of state number. So that's what you're going to put in. If you're located in this example, you were in Utah, you would write in your Utah number there, fill out the rest of the form, and that will definitely work.
Okay, so that's great. So some might say, wow, that's really complicated, right?
Mm-hmm.
And so you're saying that's actually not complicated. In other words, that doesn't merit Texas getting on this most difficult state list.
Correct. Here's a difficult state. California is not going to accept anything unless it has a valid California sales tax permit number on that certificate. So the only thing that you can do in a state like California, this is why they're number one, besides it being alphabetical order. But even if this was in who's the most difficult to work with, it'd be California. Because if you can't provide that certificate with the California number, if your vendor's doing this correctly, they must charge you the sales tax. And it's not the sales tax on the wholesale price, not their price to you. It's their price to you plus 10%. And then they're charging the sales tax on top of that. And the sales tax rates in California are pretty high. The average is going to be 8.54. Sometimes it could be 9%. So if you're selling something for $100, if the sales tax it was just on the sales price, it would be $9. But if you're selling it on the sales price plus 10%, now your tax basis is $110. You've got that 9% on there. Now your sales tax is $9.90, and that's coming out of your profits. So if you have one or two sales in California, you may just want to pay that sales tax out of your pocket. But if you have multiple sales in California, you may want to just bite the bullet, register voluntarily, because generally the cost of compliance is going to be a heck of a lot less than you paying that $9.90 out of your pocket on every transaction.
Gotcha. So that really does illustrate when we say it's a difficult state. I mean, sales tax is a pain, period. And Texas is not a difficult state when it comes to drop shipping because it will accept your out-of-state sales tax number, if not the certificate itself, right?
Mm-hmm.
But California and some of these others are extremely difficult and basically forces you to just get registered in that state so you can issue an exemption certificate. Correct.
And by the way, a resale certificate is a type of exemption certificate. Excuse me. Here's a couple more difficult states. They're not on the top 7, but they're still in the top 10. Florida and Louisiana, a lot is going to depend on your vendor. If your vendor has a warehouse inside of, let's say, Florida, and the inventory is inside of Florida at the beginning of the transaction. Your vendor isn't located in Florida. They just have a warehouse there. They definitely have nexus there, but they're not, a domestic Florida company. They're basically, most of their operations are outside the state. But if the inventory starts off in Florida at the beginning of the transaction, then the vendor is going to have to require the Florida state specific. It's got to be you got to be licensed to issue that Florida resale certificate. Now, let's say that they don't have a warehouse in Florida. They just have some salespeople that travel to Florida. And both the retailer and your vendor are located outside of California. The inventory is outside of California at the time of sale. Well, Florida doesn't recognize that as a Florida transaction. So you don't need a Florida-specific certificate. Now, that starts getting pretty confusing, especially if a vendor doesn't know which warehouse they're going to be shipping from at the beginning of the transaction. So some of your vendors may just make a blanket statement, we only accept Florida certificates. But if they don't have a physical location in Florida, then you don't have to provide that to them. They may not understand that. A lot of times our clients call us and say, hey, can you get on the phone with this company? Can you get on the phone with that company? And we're talking about big companies, companies who you think would know what the rules are. And unfortunately, a lot of these big companies have a lot of turnover, or they just don't devote enough time to stay on top of these things. So sometimes it's an education process, letting your vendor know what they can accept that protects them and allows them to not charge you the sales tax. So Florida and Louisiana, very, very similar rules. Hawaii, this one's a little bit different, because in Hawaii, even if it is a sale for resale, there's still a tax that's charged, except instead of paying a 4% tax, you're going to pay 0.5%. So you get a 3.5% break by registering in the state of Hawaii. And then in Illinois, Illinois comes right out and tells your vendors that, hey, you're allowed to accept a whole bunch of different types of documentation, but if you do, we're going to audit you in an audit. We're going to ask you a whole bunch of questions, make you jump through a bunch of extra hoops, proving that this was a sale for resale. So we strongly suggest you use one of the Illinois certificates. In order to use that, you have to have an Illinois number. Now, Illinois is different than all other states in that they have a special type of number. It's called a resale number. And they're one of the few states that has this. You can, if you don't have any nexus in Illinois, you don't have a reason to collect tax, you can register for this resale number, which will allow you to use the Illinois certificate. Your vendor will accept it, but there's no other attachments, no other strings attached. You don't have to collect sales tax. Be careful though when if you're going to try to go this route, or your vendor's making you go this route. You don't want to be registering for the retailer's occupation tax, which we've seen some people make mistakes. You want to make sure that you're registering for the resale number. And you can put that on the normal certificate, and your vendor should accept that every time. So a couple questions that, as vendors, as retailers, you want to be asking yourself. We talk to a lot of vendors too. We have questions for vendors, but first one is, where do you have nexus? Because if you have nexus, that's a whole nother conversation, but you really should be getting registered. And once you're registered, then you can just give them your certificate for that state. So that's one of the questions you want to ask yourself. The second question is, where are you currently paying your vendor's sales tax? And look at your invoices. Sometimes I speak to some retailers, they don't even realize they're paying sales tax, but look at that. And in some states, 36 of them to be exact, there's something that you can give them without doing anything else, and you will not have to pay that sales tax anymore. In those 10 states that I mentioned, and if you count Illinois, 11 states, but in those 10 states, you've got to make a business analysis. Does it make sense for me to register, or should I continue to pay this sales tax? And you can look at the rest of those questions there. They pretty much all tie back to the same underlying theme here, that sometimes you can actually save money by getting registered to collect sales tax, because the cost of compliance, if you're doing a lot of business, is generally going to be less than the sales tax you're paying out of your pocket. Because if you're not registered to collect sales tax, you can't collect it. And Andy, I want to make one big point here, and I think we've talked about this before. If not, we have another podcast coming up. In this scenario, we have heard a lot of stories, and some people have come to us and told us, first person, they would be collecting the sales tax on Amazon because they're paying the sales tax to Walmart. And in their mind, they think that, hey, since I'm paying the sales tax to Walmart, I can just put that sales tax in my pocket from Amazon. And you cannot. That's a cardinal sin. We hear this more often with people doing drop shipping from eBay and buying from Amazon and selling on eBay, but you'd actually sell on eBay and then buy from Amazon. And this is a cardinal sin. People, you can get criminal penalties in addition to the civil penalties. That's why you never want to put the sales tax in your pocket. If you're doing this the correct way, then some states allow you to take a credit for the sales tax you paid, but then you still have to be approved to collect the sales tax, number one. And number two, you have to remit the difference to the state.
All right. Well, a lot of questions answered, Mike, and I predict over time this will be one of our highest searched out podcasts because drop shipping comes up all the time. So with that, though, if you have further questions, the best way to get those questions answered is to hook up with Mike on LinkedIn. Those of you who are members of our inner circle, then you get to ask your questions inside our private Facebook group. So please, when you link up with Mike on LinkedIn, just ask him for more information on how to become an inner circle member so that you can get your answers. Along with the question show notes, we will post a download of this slide deck that Mike shared. So Mike, thanks again. Look forward to our next podcast.
Thanks, Andy. See everyone soon.